Let's take a stroll down SoFi's financial performance and growth memory lane here and revisit why I've been so bullish on SoFi. It's like watching your favorite sports team's highlight reel. Each play just gets you more hyped for the game ahead. First off, SoFi's financial performance has been nothing short of spectacular. We're talking about a 3-year revenue compound annual growth rate of 36%. That's not just growth, folks. That's hypergrowth on steroids. In their most recent quarter, SoFi delivered record revenue of nearly $600 million, up a whopping 22% year over year. It's like they're playing 4D financial chess while others are still figuring out how to set up the checkers board. But here's the kicker. SoFi isn't just a one-trick pony. They've successfully diversified beyond their original student loan business. Now, 45% of their revenue comes from non-lending parts of the business. It's like they've gone from being a star quarterback to being the entire offensive lineup, defense, and special teams all rolled into one. And let's not forget about SoFi's tech business. As I've said before, and I'll shout it from the rooftops again, this could be the AWS of finance. That's not just me talking, it's what CEO Anthony Noto keeps saying. Imagine powering the back end for other fintech companies. It's like being the electricity company in a world going digital. Everybody needs you, and they can't function without you. Now let's talk user growth. SoFi isn't just adding more members, they're seeing an increase in the number of products used per member. It's like they're not just inviting more people to the party. They're getting everybody to stay for dinner, dessert, and an after party too, and they're all happily footing the bill. Have you seen the deposit growth? Consumer deposits rose by $2.2 billion. That's not pocket change, my friends. It's like SoFi's become the neighborhood piggy bank, and everybody's lining up to make deposits without having to pay for the privilege of keeping their money safe. But what really sets SoFi apart is the quality of their loan book. We're talking about personal loan borrowers with an average FICO score of 747 and an annual income of $168,000. Those aren't just prime borrowers, they're the cream of the crop, the creme de la creme of creditworthiness. And just when you think it couldn't get any better, SoFi announces they're entering the small business banking and financing market. With 33 million small businesses in the US, many struggling to access financing, this could be a game changer of epic proportions. They're initially doing this through partnerships, but I think it's sort of the Amazon model. You bring in a partner, learn the ropes, and then you have their lunch a little bit later once you've figured out how to run the business. Sneaky? Maybe. Smart? Absolutely. Now let's talk about the tech advantage. While only 5 to 20% of traditional banks offer online loan applications, yeah, seriously, welcome to the 21st century, folks. SoFi can make the process 100% digital. It's like comparing a smartphone to a carrier pigeon. There's simply no contest. And behind all this is a management team that knows how to execute. CEO Anthony Noto's vision for SoFi to become the AWS of finance isn't just talk. They're actually making it happen step by step, day by day. Now, I know what some of you might be thinking. But wait, the current valuation seems high. And you're right. 65 times 2024 earnings might look steeper than Mount Everest. But here's the thing. Earnings per share are expected to compound at over 100% for the next 2 years. It's like buying a rocket ship while others are still looking at bicycles and wondering if they should upgrade to a scooter. In fact, I see parallels between SoFi and other successful growth companies like Amazon and Tesla. Just like them, SoFi is focused on building multiple businesses for the long term. And just like with Amazon and Tesla, retail investors might have an advantage in recognizing SoFi's potential early, while Wall Street is still scratching their heads and muttering, but the numbers don't look that good right now. So there you have it, a refresher on why I'm more excited about SoFi than a kid on Christmas morning. But hold on to your hats because we're just getting started! In the next section, we're going to dive into why the current interest rate environment could be a massive tailwind for SoFi. Trust me, you won't want to miss this. It's like discovering a secret passage in a video game that leads straight to the treasure room. Now let's talk about the economic climate we're navigating. You know, predicting economic trends is a bit like forecasting the weather in London. We can see the storm clouds gathering, but pinpointing exactly when and where the rain will fall? That's trickier than trying to eat soup with a fork. What we do know is that the economic barometer is showing some interesting readings. Inflation has been cooling off like a freshly baked pie on a windowsill. Unemployment seems to be picking up, though it's still relatively low. It's like the job market can't decide whether it wants to be a buyer's or seller's market. And GDP growth? It's been steady, like a metronome keeping the beat of our economic symphony. It's like we're kind of in the eye of the storm. Calm for now, but with the potential for significant changes on the horizon. And that's the intriguing part for companies like SoFi. You see, when we've seen similar economic conditions in the past, there's often been a shift in monetary policy from the Federal Reserve. It's like when the weather starts to change, and you know it's time to switch from your winter coat to a light jacket. For a company like SoFi, with a diverse business model that would make a chameleon jealous, these potential economic shifts could be particularly impactful. On one hand, changes in the interest rate environment could affect their lending business. When interest rates come down, people actually start to refinance their borrowing, and therefore SoFi's lending business should go to the moon faster than a SpaceX rocket. On the other hand, the technology platform could see increased demand as other financial institutions look to adapt to new conditions. It's like SoFi is selling umbrellas and suddenly everyone realizes it might rain. In addition, valuations for fintech companies and barely profitable new growth companies tend to go up when interest rates come down. A 1% cut in interest rates should give us about a 10% increase in the stock price for your average growth company. But remember, SoFi isn't your average anything. But wait, there's more! SoFi isn't just a lender anymore. They've built a robust ecosystem of financial services that would make a tropical rainforest look sparse in comparison. It's like they've diversified their crops so that no matter what kind of economic weather we get, they're positioned to harvest something. Let's break it down a bit more. If we see a more favorable lending environment, SoFi's personal loans and student loan refinancing business could see a boost bigger than a bodybuilder on protein shakes. More people might be inclined to consolidate debt or refinance at better rates. At the same time, SoFi's banking arm has been growing more impressively than a beanstalk in Jack's backyard. They've been attracting deposits at a rapid clip, offering competitive rates that make traditional banks look like they're stuck in the Stone Age. If the broader interest rate environment shifts, SoFi's ability to offer attractive savings rates could give them an edge in attracting even more deposits. It's like they're throwing a party and everyone wants an invitation! But here's where SoFi's genius really shines brighter than a diamond in a coal mine. Their technology platform, which powers financial services for other companies, could see increased demand as financial institutions adapt to changing economic conditions. They might turn to SoFi's solutions to stay competitive and reduce costs. It's like SoFi is selling shovels in a gold rush. No matter who strikes gold, they win. And let's not forget about their recent dip into small business banking. In a changing economic landscape, small businesses often need more financial support than a tightrope walker needs a safety net. SoFi's digital-first approach could be exactly what these businesses are looking for. It's like offering a life raft to someone caught in a storm. Now, I'm not saying SoFi has a crystal ball. No one can predict the future with certainty. If we could, we'd all be billionaires sipping cocktails on our private islands. But what I am saying is that SoFi seems well-positioned to navigate and potentially benefit from various economic scenarios. They've survived the horror period for growth companies, for fintech, for lenders, for student loan lenders over the last 3 to 4 years. It's like they've made it through a financial haunted house and come out the other side stronger. It's this adaptability, this resilience in the face of changing economic winds that makes SoFi so intriguing as an investment. They're not just waiting to see which way the wind blows. They're building a business that can sail in any direction. It's like they've created a financial Swiss Army knife. No matter what the economic situation, they've got a tool for it. Now let's pan our camera to the bigger picture. Fintech. I can't help but draw parallels between what's happening now and the California gold rush of 1849. Back then, thousands flocked west, driven by the promise of striking it rich. Today, we're seeing a similar rush. But instead of pickaxes and pans, we're dealing with algorithms and apps. The fintech sector isn't just growing. It's exploding like a supernova in the financial universe. According to a report by Boston Consulting Group, the global fintech market is expected to reach a staggering $1.5 trillion with a T by 2025. That's a compound annual growth rate of 25%. It's as if we've discovered a whole new vein of gold, and everyone's scrambling to stake their claim. But here's what's truly fascinating. This isn't just a Western phenomenon. From China to Brazil, from Nigeria to India, fintech adoption is skyrocketing faster than a firework on the 4th of July. In fact, emerging markets are often leading the charts. It's like watching a global game of leapfrog where countries are jumping straight from traditional banking to cutting-edge financial technology. Why is this happening? Well, it's simple. Fintech is making financial services more accessible, more affordable, and more convenient than a 24/7 convenience store. It's democratizing finance in a way we've never seen before. Suddenly, someone with just a smartphone can have access to services that were once reserved only for the wealthy. It's like we're witnessing the financial equivalent of the invention of the printing press. Knowledge and power are being put into the hands of the many. So where does SoFi fit into all of this? Well, if the fintech sector is a gold rush, then SoFi isn't just another prospector. They're selling the shovels, the pans, and they're building the railroads. Their diversified model puts them in a unique position to capitalize on multiple aspects of this boom. Think about it. They're not just offering loans or bank accounts, they're providing a full suite of financial services from investing to insurance. And remember that technology platform we talked about earlier? That's like owning the mining equipment that every other prospector needs to rent. But here's where it gets even more intriguing. Despite all this potential, many fintech stocks, including SoFi, have taken a beating over the past years. It's like we're in the middle of a gold rush, but someone's offering mining claims at a discount. And it reminds me of something that Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." Right now, there's a lot of fear in the fintech sector. And for a contrarian investor, that spells opportunity with a capital O. Now let's talk about something crucial. What's the balance between potential risks and rewards when investing in SoFi? Imagine we're using one of those old-fashioned weighing scales my grandparents used to have. On one side, we have the risks. On the other, the potential rewards. Let's start by loading up the risk side of our scale. First, there's the ongoing uncertainty around student loan forgiveness. SoFi's roots are in student loan refinancing, and changes in this area could impact a significant portion of their business. It's like trying to build a house when the ground keeps shifting beneath your feet, thanks to political earthquakes. Next, we have to consider the intense competition in the digital banking space. Giants like PayPal and Square are muscling into this territory, not to mention the countless fintech startups nipping at SoFi's heels. It's a bit like being in a race where new runners keep joining, and some of them have rocket boots. We also can't ignore the broader economic risks. A recession could lead to increased loan defaults and decreased demand for financial products. It's like sailing into potentially stormy weather. You need to be prepared for rough seas and maybe a few rogue waves. And lastly, as a tech-forward company, SoFi faces cybersecurity and regulatory risks. One major data breach or regulatory misstep could seriously damage their reputation and bottom line. It's like walking a tightrope. One wrong step and, well, let's not look down, shall we? That's quite a lot of risk. But before you start thinking, well, maybe I'll just go and do something less risky, like juggling chainsaws, let's look at the other side of our scale. First up, we have SoFi's impressive growth trajectory. Analysts are projecting continued strong revenue growth, and those analysts work for big Wall Street banks who compete with SoFi. So no conflict of interest there, no siree. Some are suggesting that revenue could more than double in the next 2 years. It's like planting a tree and watching it grow into a mighty oak in record time. Then there's SoFi's diversified business model. Lending, investing, banking, technology. SoFi has multiple revenue streams. This diversification should help them weather economic storms, no matter what they are. It's like having an all-weather wardrobe. They're prepared for sun, rain, or snow. We also have to consider the massive market opportunity. The shift to digital banking is still in its early stages, especially in areas like small business banking where SoFi is just getting started. It's like being at the beginning of the California gold rush. There's still plenty of gold in them their hills. And let's not forget about the potential for multiple expansion. If SoFi can convince the market to value it more like a high-growth tech company than a traditional bank, we could see significant share price appreciation without even factoring in their growth. It's like having a vintage sports car that the market suddenly realizes is much rarer and more valuable than previously thought. So how does our scale look now? Well, a little bit more balanced, wouldn't you say? And here's where it gets really exciting for those who can stomach the risks. The potential rewards could be substantial. Now, I can't tell you whether SoFi is right for your portfolio. That's a decision only you can make, like choosing between pizza and sushi for dinner, though why not both, right? But I can tell you that I believe the potential rewards outweigh the risks for my portfolio. Always with a small allocation, though. I always say with growth stocks, put in a small amount. Say you put in 1% of your money. If the company goes out of business, you don't notice it. If the company does a 10x, it's now 10% of your portfolio, assuming everything else stays the same, and you really notice it. That's kind of the sweet spot where I would generally go with all tech stocks or all early-stage tech stocks. So, as we wrap up our deep dive into SoFi, let's recap why I believe this company could be a game changer in the fintech space. We've seen how SoFi has transformed from a student loan refinancing company into a full-fledged financial ecosystem. The impressive revenue growth, diversified business model, and strategic expansion into new markets all point to a company with enormous potential. It's like watching a caterpillar turn into a butterfly, except this butterfly could potentially make you rich. Now you might be thinking, if SoFi is such a great opportunity, why is the stock price so low? And that's a fair question. The market, in its infinite wisdom, or perhaps in this case, its short-sightedness, has lumped SoFi in with other struggling fintech stocks and small and regional banks. But as we've discussed, SoFi is not your average fintech company, and it's definitely not a small regional bank. It's like comparing a Tesla to a horse-drawn carriage. They might both be forms of transportation, but that's where the similarities end. So, the way I look at this, if they can pull off building the AWS of finance, then this could be a serious opportunity. We're talking potential returns that could make your head spin faster than a carnival ride. SoFi could be severely undervalued if they pull it off. It's like finding a winning lottery ticket that everyone else has overlooked. I thank you for tuning in, and I wish you tremendous success. But before you go, let me leave you with this thought. If you're worried about how far this market's going to crash and what's going to happen to your favorite tech stocks next week, don't fret. We're going to run through NVIDIA, the S&P, the NASDAQ, Palantir, Apple, Tesla, Microsoft, NIO, Alphabet, Amazon, Meta, PayPal, SoFi, and maybe one or two other names we can think of along the way. It's like a grand tour of the stock market, and you've got a front row seat. Remember, investing isn't just for the rich and famous. It's for anyone who wants to take control of their financial future. It's about making your money work for you, instead of you always working for your money. It's about building wealth over time, brick by brick, stock by stock. And here's the kicker. You don't need to be a millionaire to start. You don't even need to be a thousandaire. That's right. If you think you don't have enough money to invest in stocks, watch this.